Welcome to another informative Tennant Group video. My name is Steve Tennant and I'm the Managing Director of the Tennant Group, as well as a sponsored trustee on the Diversified Umbrella Funds. We're excited to announce that the NCA has granted the Diversified Umbrella Funds approval to provide in-fund home loans to the members of the fund. We have done this to keep ourselves a step ahead of the market and place the Diversified Umbrella Fund in a more favorable competitive position compared to the other umbrella funds service providers. Within Tenant Administration Services, the home loans are not outsourced to another credit provider. The members rather take the loan directly from their share of fund and they then pay back into their own fund monthly. This manner of taking a home loan is the best way, as the member is using part of their own share of fund, which is not affected by investment drawdowns. Alternative home loan facilities use sureties. Such sureties could lead to a mismatch between the value of the member's share and the amount required to settle the surety should the market drop. When an outsourced service provider is used, the costs are also higher for the member, which is not in their best interest. We, the trustees of the Diversified Umbrella Funds, have agreed that the member will be allowed to apply for a home loan equaling up to 60% of their share of fund, less the tax payable on that amount. The minimum loan is 5,000 rands and the maximum term is 20 years. However, this is limited to the period until the member's normal retirement date. There is a once-off fee of 320 rands and an ongoing monthly fee of 19 rands per month, which is payable to Tenant Administration Services to manage the home loan. The following criteria must be met before a member can apply for a home loan from the Diversified Umbrella Funds. They must be a member of the fund and must be contributing monthly. The member must own the property or own the rights to build on the property. And either the member or one of their dependents must live on the property. The member may only use the home loan for the following reasons: to repay an existing loan in respect of such property, to acquire or erect immovable property, to make additions, alterations, or to maintain and repair a residential building, including installing a JoJo tank within your own property and installing solar panels within your own property. The member will need to ascertain their available share of fund benefit. The member can either get the value from the Tenant app or contact their administrators directly. To get the exact amount of the possible home loan, the administrator will calculate 60% of the share of fund and reduce the value by the latest tax amount applicable should the member exit the fund. This will be the maximum amount the member can borrow. The member will be required to get approval for the loan amount by getting a credit check report from the National Credit Regulator. Please remember that this is a legal requirement which proves that the member is able to afford the repayments. The cost of the credit check must be borne by the member and is not refundable should the member fail such check. Alternatively, the member can make a payment of approximately 207 rands, including VAT, to the administrator, who in turn will obtain the credit check report on their behalf. It is important to note that the members cannot use the once per annum free check that the service providers offer, as it does not reflect the credit score. Supporting documentation, including a completed income and expenditure sheet, 3 months bank statements, and proof that the property is in the name of the member, must be submitted to the administrator. Once the member has been approved for the value they would like to loan, a pre-agreement document, which is drawn up by Tenant Administration Services, is sent to the trustees along with the credit check report and supporting documentation. The trustees will then either approve the loan or not. The trustees may request further documentation from the member if they deem it necessary. Once the loan has been approved by the trustees, they will sign all the necessary documents, and these will be sent to the employer and member for signature. Once this has all been concluded, the loan amount agreed upon will be paid into the member's bank account. The monthly home loan repayment will be deducted from the member's salaries by the employer and paid across to the Diversified Umbrella Fund along with the normal contributions as one payment. The interest rate applicable to the member's loan is set out in Notice 2 of 2017, which is the repo rate plus 2%. The benefit of this arrangement is that it applies to all members. No one is penalized for being a higher risk candidate than the next. The member's annual benefit statement will include their home loan statement. This will allow them to see how much is outstanding and how much has been paid back into their retirement fund. If a member leaves your service, the normal exit process is followed. Tax will still be applied for on the entire benefit, including the home loan portion, and be paid across to SARS. The remainder of the benefit is then payable to the member. Please remember that even though a member is borrowing a portion of their own retirement fund, this is still a credit loan and is a legally binding transaction. All the terms and conditions are set out in the home loan agreement. You have received the following documents as part of a home loan pack for your perusal: Tenant Administration Services Home Loan Agreement, an unpopulated pre-agreement, Notice 2 of 2017 from the FSCA providing the prescribed interest rate, monthly income and expenditure statement that the member will need to complete to apply for the credit check. As the member pays the interest into their own share fund, the real cost of borrowing is the difference between the fund investment return and what the member has paid in interest. It is only when the average fund return exceeds double the interest rate paid by the member will such member be worse off. The provisions of this facility benefits the employer as their staff can enhance their homes through a convenient and affordable mechanism that is seldom available from other employers. Such loans could even be used to create better working environments at home. Should you have any questions, please feel free to contact Melanie Nimon or Marie Hutting at the Tennant offices. Thanks for watching.